The trading journey from $10 to $20,000, day 6. In this journey, this 8-hour setup helped me make $3,000. In today's video, we will go through 3 trading styles, and these are definitely new insights for you guys. Make sure to write these notes down right away. First, we will trade when the market shows confirmation of rejecting further upside or rejecting further downside. Second, the combination of the pink, purple, or light blue signals with the SMC and ICT trading methods. Third, trading with the trend when a buy or sell signal gets rejected. Now let's start with the first concept. Look at the chart. Do you see a red bar at this position and also at this position? That represents a bearish engulfing candlestick signal. To enable this indicator, open the indicator settings and select this option. Then on your TradingView chart, you will see green bars and red bars appear. Green bars represent bullish engulfing patterns, while red bars represent bearish engulfing patterns. Looking at the chart, you can see that we have 2 engulfing patterns like this. But that's not the key thing you should focus on. What you should focus on is that this engulfing pattern gets rejected by the market, and I will explain how that rejection happens. Market rejection appears when a bearish engulfing signal from the indicator is immediately followed by a bullish engulfing candle. Let me zoom in on these 2 candles so you can see it more clearly. Another form of rejection is when a bullish engulfing signal is immediately followed by a bearish engulfing candle. Clearly at this position, the indicator suggested a bearish engulfing pattern. On the left side, we can still see that the red sell signal is still valid. But right after that, a bullish engulfing candle appears, showing market rejection. The market does not allow sellers to push the price lower anymore. There is a high probability that the market is preparing for a strong upward move. So our task is to wait for the next buy signal and enter a buy trade when the conditions are met. The winning probability is very high. See that? A green buy signal has already appeared. As explained earlier, I will definitely enter a buy trade at this position. The TP will be placed above the previous high. The SL will be half of the TP distance. As I mentioned earlier, there is a strong chance that the market is about to move up sharply. So I'm confident that if you enter a buy at this light blue buy signal, you will likely hit the TP. But I will not enter the trade yet. I will wait for the setup I mentioned earlier to appear before entering the buy. There it is. A doji Morningstar pattern, a very clean setup. Let's enter a buy trade and aim for 3R. If you bought at the light blue signal earlier, you would already have 2 trades hitting TP. Very easy to understand and easy to follow, right? Now you can clearly see how market rejection works using this indicator. Let me repeat this once again so you remember. Let's go back a few hours earlier on the chart. It means before the buy trade that just happened took place. Here we can also see a bearish engulfing signal that gets rejected. On the left side, a purple signal is still active. It shows that the market has rejected the sellers. Buyers are likely to push the market upwards soon, and here we can see a green buy signal appearing. We also have a Morningstar pattern here. This Morningstar pattern rejects the bearish engulfing once again. So can we buy here? Yes, we can. And the result is that the market moved up right after. With this indicator, do you find trading easier? Leave a comment and let me know. I've explained this sell trade many times before, so I won't go into detail again. If you don't know yet, you can watch the $20,000 trading journey videos from episode 1 to episode 5. There are detailed explanations there. The pink-purple signal is already strong, and now we also have a doji evening star pattern. Doesn't that increase the win rate even more? I will enter another sell trade and set the TP at the same level as the previous trade. Okay, now we move to the second concept. That is combining the super scalping indicator with the SMC and ICT trading methods. At this pink-purple signal, what SMC and ICT concepts did I combine to enter a sell trade here? Yes, there is a combination. Take out your notebooks and write this down. It's not random that I've been posting videos about the SMC and ICT trading methods recently. This video focuses on how to enter a trade, while the other video explains the knowledge about POI, point of interest. Right at this position, we can identify a POI zone. And here we have 2 FVG zones, fair value gap. But this FVG aligns better with the pink-purple signal. It provides a better entry with a tighter SL, so we ignore the lower FVG. According to SMC and ICT theory, the SL should be placed above the POI. But here, take a look. At this position, the candle moved up and touched the FVG area, then immediately dropped with a red candle right after the green one. After that, a small bullish candle formed, and this candle stayed completely below the FVG. This is also where the pink-purple sell signal appeared, so we can see that the market is respecting the FVG, and the pink-purple indicator is not weak anymore. It often predicts market reversals very accurately. Therefore, I placed the SL just above the upper boundary of the FVG. My TP will be placed at the sell-side liquidity below. That setup could give around 8R profit. Now we move to the final concept, number 3, trading with the trend when a buy or sell signal gets rejected. As you can see, I entered a sell trade at this position, but here there is actually a buy signal. Normally I should prioritize waiting for a buy setup, so why did I sell instead? Please take out your notebooks and continue taking notes. This buy signal is formed at a lower low compared to the previous bottom. This indicates the market still wants to move lower. After the buy signal, the market did not rise strongly. Next, we can see that after the buy signal appeared, the market did not rise much. Instead, it moved sideways within a narrow consolidation range like this, and then dropped sharply. These two red candles easily broke the buyer's structure. That confirms the downtrend is still very strong. We also identify another POI, point of interest zone, with an FVG fair value gap inside it. This is similar to the previous SMC and ICT setup. I will place the SL above the POI zone. And this time we cannot identify the sell-side liquidity, so I will aim for a 4R ratio to be safe. And this time I will aim for a safer 4R TP. This situation is quite similar to the previous entry. After the pink-purple signal, the market confirmed buyer strength with two strong bullish candles. This suggests the market may continue to rise strongly. We must follow the trend when a sell or buy signal fails. After the second strong bullish candle, the market created a POI zone. Inside this zone, there is also an FVG. But the price has already moved up, so we place a buy order at the FVG. Whether the market comes back to touch the FVG or not, we don't know. We can only wait. The SL will be placed at the lower boundary of the POI. The TP will be around 4R or 5R. The market has come back and touched the FVG. Will this entry fail or succeed? Even if it fails, I'm still satisfied with day 6, because I already made a good amount today. So now I have reached the $10,000 milestone. There is a clear history and detailed explanation for each trade. I also provide this indicator for anyone who needs it. Whether you believe it or not is up to you. Those who believe and apply it may achieve results like this. Those who don't believe will only watch others succeed. I am 10-hour trader, helping you trade better.